Morning, girls. This is the next and final part of the farm accounts question. It's part C. It says prepare a general profit and loss account for the year ended 31st of the 12th, 2005. And this is really the same as your general profit and loss accounts that you've done in the service firm. So just like if you had, we'll say in a club account, you had a bar within the club, when you're doing the main profit and loss account for the club, then you leave out any information that you'd already included in the bar profit and loss account. Same goes here when we're doing this general profit and loss account. We're going to leave out any information that we included in the enterprise analysis account for cattle and milk and for sheep beforehand, and include everything else. So for a start, I have already done the solution out here, and I'm just going to go through each of the parts of it very quickly. So the first thing is the profit on cattle and milk. That's just the information you bring straight across from your enterprise analysis account for cattle and milk. And same goes for the profit on sheep. Just take that straight from your enterprise analysis account for sheep. The next is your investment interest, and if we look across here, this was a reasonably straightforward one to calculate. It says 6 months interest, 600, so it doesn't matter about, you don't have to work out what is due and or think about what was due at the start or due at the end of the year, because if 6 months is 600, then 12 months is 1200, and that's what you should be getting, 1200. Okay, next is your forestry premium. Over here, forestry premium, 2,100, just put it straight in, and that's it. There's nothing else there, because if you run down through all the rest of the income, everything else there has, like the bank balance is an asset, it's not income, and the rest of the stuff there has to do with either sheep or cattle and milk. Okay. So if we go over to the expenditure side then, and again, to get our information, we just run down through the check payments, ignore anything we've already put in, like fertilizer, general farm expenses, dairy wages, sheep, cattle, they've already gone in before. So we're straight down to light, heat and fuel. So just a little bit of work to do there. We start with the figure 3,400 in the receipts and payments. And then there is a stock of fuel, 800 at the start. So we're going to add that on because it was paid for last year. So it's not included in that 3,400, but it is going to be used this year. So it should be. So we add it on. Same goes for, there's going to be a stock of fuel at the end of the year, 900 here. That was paid for this year, included in the 3,400, but it's for next year because we're not using it this year. So we're going to subtract that. And then lastly, there is a electricity due at the start of the year, 400. That is included here. We assume we paid for it during this year, but we used it last year, so we're subtracting it. So here goes 3,400 plus the 800 minus the 900 minus the 400, and we're multiplying by 0.8 because if we go down to, where is it now? Yes, part 4 here. It says other expenses are to be apportioned 80% to farm and 20% to household, because farmers, generally speaking, live where they work. They live in the farmhouse. Then some of the expenses that they're racking up, like they're using electricity, some of that is they're using electricity to run farm machinery, so the business should be paying for it, and some of that electricity they're using to run their television, and the farmer should be paying for it themselves separately. So if the business pays the electricity bill, for instance, then some of that money should go down as drawings if the household was using some of that electricity privately. So we're seeing that for all other expenses, it says should be apportioned 80% to farm, 20% to household, or 20% to drawings. Okay, so that's why we're getting the 0.8 here for 80%. Okay. Next part here, repairs, and that's, if we go down here, light, heat and fuel, repairs, 6,300, and we're just getting 80% of it again in here. Depreciation on machinery, well, we had at the start, we had machinery 60,000, plus another 6,500 that we bought during the year. So over here we have 60,000 plus the 6,500. The rate of depreciation is 10%. So our total depreciation for the year will be this plus this by 10 or by 0.1, and then we're getting 80% of that expense to put in here. Okay. Next one then is interest, and if you've already done the first part, statement of capital, you'll have worked out that the interest here included in this interest and loan figure is 1,350. So what we're doing again is that's 18 months, so we're dividing by 18. multiplying by 4 because there's 4 months of that is for this year, and then again getting 80% of it to put in here. And then we get our total expenses, subtract from our income, and we get our net profit. Okay. So just one thing to note, I suppose, all the drawings that, the 20% of those expenses are irrelevant really. We can forget about them because they go into the balance sheet normally, and the questions we're doing in farm accounts at the moment, we won't be preparing a balance sheet, so you don't have to worry about them. You just have to worry about taking them away from your expenses figures that go into this profit and loss account.